Welcome to the Midweek Market Update, where I do a technical analysis and give you some of my thoughts on SPY, the Qs, and IWM. I've also got 5 or 6 trade ideas for you at the end of the video, so stay tuned for that. Jumping into our S&P analysis, let's take a moment to talk about areas of balance. Here's one, and here is yet another. Over the past week and a half or so, the market's been up, the market's been down, but we've gone absolutely nowhere. You can see we've closed here on Wednesday right at the low end of balance, so there's a few things we can look at. But before we get into it, I just want to make you aware that the size of the balance area directly correlates to the size of the breakout or the size of the breakdown. So be prepared for a larger move in one direction or another as we start to resolve this balance area. In terms of direction, let's check in on our S&P sectors and analyze where the most risk is in the marketplace. Up the most today was energy sector, and down the most today was the biotech sector, neither of which make up a huge portion of the S&P 500. So what do we need to focus on? Well, the XLK, the tech sector, is the heaviest weighted sector, down about 2.5%. No surprises there. We knew tech was soft. We knew that they were moving slightly lower compared to the S&P 500. But the XLF, the second heaviest weighted sector, up about 0.75%. That's where your risk lies. If the XLF and the XLK start to move in sync to the downside, you better believe we're probably breaking to the downside of this balance, in which case, we have some targets below closer to 370. We'll talk about why that is in just a moment. But the XLF, let's take a scroll over to that chart for a moment. Here it is, right? Very impressive move off of this local low. It's definitely due for some sort of pullback, in the grand scheme of things. Now, could it keep going up forever? Absolutely. There's nothing stopping it from doing that. But, realistically, pullback is always healthy for an uptrend. Where would you be looking for it to pull back into? Prior high, probably somewhere around 3150. That being said, again, if that coincides, if this pullback here coincides with tech being soft, once again, you're looking at the S&Ps falling out of that balance area. If you want to get more granular than just the XLF, though, we brought it up very briefly in last week's video. Let's take a look at the ZN. The ZN is the 10-year note, and this is going to be your key to the financials, right? So if you want keys to unlocking other doors, right, you just look deeper and deeper and get more granular and granular. Here in the ZN, the ideal situation is sideways. Now, why sideways, you may be saying? Well, if the ZN spikes, then guess what? Financials are going to crumble. But if the ZN continues lower, and money just gets easier and easier to borrow, then the Fed has to step up and has to do something to control the rates. Neither of those things will be good for the marketplace. That's why the option in the middle here, sideways, is the best bet in the ZN and would keep XLF in a healthy stage, as opposed to potentially seeing it again do something that would look more like this, which would be catastrophic in falling out of the balance area in the S&P 500. So those are your sectors, and that's where your risk is. Let's talk about why we were saying 370 to the downside. We know that a general rule of thumb here, and when we talk about balance areas, is that we're looking for a doubling of the range. And a doubling of the range here puts us right around 370. But it's slightly below our 371 that we had mapped out. I would just caution you to remember that this is more fresh in the mind of the market than is our prior area of resistance from in here. So I would be looking at 370 to slightly lower, right? The low of this pullback, which is really around the 368 mark. Okay, so that's a potential target to the downside if we break. Another reason we may break here is more technical, right, in market structure. We always talk about 50 SMA, support trend line, and this providing super support, but it's always the most important on the first touch. We've already touched it once, we've touched it twice, and we closed right at it here on Friday. And in the after hours session, we're actually trading below it as of right now. So all things considered, when you touch the same area in a short proximity, you're generally looking for it to start to break. We call that a flush point. First target, if we can fill the gap below, is down to 377.31. Anything underneath that, again, opens up the door to that 370, 368 area on the chart. To the upside, say we remain in balance, I'm not really expecting or going to be too aggressive until we can prove that we're starting to form higher highs, right? And there's our downtrend resistance level that I want you to keep in mind. Even if we break it towards the end of the week, and again, this is if tech has a miraculous day, completely rebounds and moves higher, I still would not be aggressive here in the S&Ps until we start to take out this 392.38. Then after that, maybe target the 400. But again, things right now are sort of stacking and looking like we could potentially break down here and move lower out of this area of balance. Let's check in on our internals. If you're not familiar with this screen, get familiar. Up here in the top right will be a link to how you can set this screen up and what it all means. I would highly encourage everyone goes and watches that video. But for now, what I want to point out is once again the divergence in what's actually happening in the market compared to the price action that we're seeing. On Monday, impressive day, right? And the internals were all there to back it up. If we look at the ADDs on Monday, absolutely impressive, way above our 2,000 strong read. But here's where it gets interesting. We had a pretty aggressive down day today on Wednesday, but what were our internals doing? Well, our breadth, I'll just tell you right now, it was split. It was divergent all day. Our breadths the past 2 days, the volume reading, it went nowhere. It was flat. ADDs, same thing, flat. Ticks, same thing. Don't look at this. Look at the cumulative build down below. This is why this one's so important. Negative, positive, negative, slightly positive, slightly negative, right? It's really gone absolutely nowhere. So you better believe that if we start to see a trend day down, if the volume reading starts to look like this into the end of the week, let me just show you. If the volume reading starts to do this, you better believe it's going to, coincide with some nasty selling because all the stars will, in quotes here, be aligning, right? If the ADDs open down here and trend lower all day, that's going to, pair up with a nasty day in the S&Ps, and the same thing goes for the ticks, right? So just keep that in mind. We haven't seen any correlation to the downside yet. We're seeing some nasty movement to the downside. So if we start to correlate, the movement will be even more nasty. Just something to keep in mind. Next up, we're going to take a look at market profile very briefly. Not a whole lot to learn here. Our profile today was, complete, no issues. Had a good excess at the top, good excess at the lows. The orange line is the current price. And again, you can see we're trading slightly below the low of the day. Again, nothing to really talk about here. Everything's healthy in terms of profile. We've filled all of our single prints. We have no poor highs, no poor lows. If anything, this will just give you a better idea of where balance is. One thing we could say about this is that price tends to not get away from value too quickly, and value technically was skewed in the higher portion of today's range. So just something to keep in mind. It's one tiny little data point in our analysis here. It's not like just because value is skewed here, we have to rally back up into that value. As we've just pointed out, there's a number of actually bearish things happening across the marketplace. We know where our risk is. Let's continue on across our broad market analysis. Jumping into the Qs here, this was pivotal. We talked about this in the Discord. This was our flush point, right? We had 3 equal lows, boom, boom, boom. And as we broke that late in the day, that was key to SPY continuing to sell off. So under 311 now in our QQQ opens up the door for much lower. And again, no surprises here. We know that tech is weak. I would say don't fool yourself into thinking that this is an oversold move to the downside. If we think of this as an area of consolidation, right? Buyers and sellers are exerting equal pressure. And just now, we're starting to peak to the downside. So again, don't fool yourself. We're 2 days aggressive down. It has to bounce. Not at all. We've seen a reasonable amount of balance here. We could very well continue lower. First support is going to be at 305. Anything underneath that, probably 300 to 298 psychological. Next up, moving over to our IWM. And again, if we fail, let's actually cover this too. If we have what we call a look below and fail, which again, I'm not entirely convinced yet. If we have a look below and fail, right, if we do something like this, trade back into this range, and here's our balance here in the Qs, then first target's going to be here. But ultimately, the look below and fail means we probably come back up all the way to the high end of balance, which is closer to 324. Again, is that likely? Probably not, but it's one scenario I want you to at least have. Lastly, the IWM for our core pieces of the market here. Downtrend still intact. Our balance is, much looser, right? We're actually trading about 50% of the balance. If we think of the balance here in the IWM as something that's more like, probably like that, right? So still slightly skewed lower, but not nearly as bearish as Qs and the SPY. So if we continue lower in SPY and Qs, your target's obviously back here at 215. Probably a first touch bounce, but If it breaks, it's definitely going to act as a flush point. You will have the 50 SMA there, and that's why I'm sort of rooting for that first touch bounce. But if it breaks after that touch, say we come down, touch it, maybe small bounce, definitely watching for a break on any retest of that 215. You can see that opens up the door for our 205 down below. Let's get into those trade ideas. Again, in IWM, I know I'm kind of skipping things here, but in IWM, sorry, I forgot to mention the trend line here. Again, not going to, just like SPY, not going to get too bullish until we start to take out some of these highs in here, not just the resistance trend line, okay? Moving into those trade ideas, finally, sorry about that. We're going to start off with CAT for Caterpillar, and if this one is great for if the market rolls over. We're going to have two if the market rolls over situations. Look at this support trend line, right? If we do something like this, it's kind of coinciding with that 50 SMA. If the market continues to roll over and CAT is already starting to pull back a bit, that's a buy. $200, definitely going to be a buy in Caterpillar. That's something I have on my radar. The next one's extremely similar in DE for John Deere. Again, we have a support trend line that would look something like this, just going from some of these lows. If we move lower, if this continues to roll over, your buy point in John Deere, 320. Okay, so that's something, an area of interest that I'm watching out for. Next up, we're going to get into some other trade ideas that are not the same. So EXPE for Expedia Group. This one is forming a bit of a pressure cooker top, honestly, even though the marketplace is, feeling rather bearish right now. It has some decent relative strength. I would be watching out for a move above, if I grab the right tool there, a move above here, our 165, 166, we'll call it, whole dollar. If we can break above that, get a strong close above, I would be watching for this to continue as almost a bull flag on the daily. It's not quite as clean as a true bull flag, but the psychology and the underpinnings are there. So next up after this is going to be a bearish trade idea. So GOOGL. This is obviously Google, and what we're looking at here is, this has proven to be relatively strong compared to rest of tech, but if tech continues to be weak, flush under 2,000, the round number, to probably come down and at least fill this gap. The gap fills to 1949, call it 1950 the whole dollar. That's a decent trade into the end of the week if tech continues to be soft. And then after this, we have LVS for Las Vegas Sands. This is day one of a breakout, right? Just like Expedia, they kind of are in the same sector, right? Here's your breakout level. We formed a hammer actually above it. So at some point, as the market was selling off, right, we came back down and touched it, but buyers responded off of that level. It seemed to held up as support for now. I would be potentially watching this as a day two mover over the high of today, that 66.77 mark. And then lastly, we'll leave you with one more. We'll do the 6 here. SHAK. This is for Shake Shack, and this is another bearish play. It didn't work out the first time, but key takeaway here, we had a high, lower high, lower high, lower high. So if this area of support breaks here at the 113 whole dollar just about, I would definitely be looking for a move into our next support at 107.18. 50 SMA will be slightly above it, but again, if the market's really hot and heavy to the downside, I see no problems here in Shack getting to that 107.18. So there's 6 trade ideas for you. 2 of them were very similar. That's why I included this last one. I hope this video was informative in some way in terms of the sector breakdown, things to keep an eye on. If you learned something new, feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. And with that, I wish you all a green rest of the trading week, and I hope to see you in the Sunday video for the weekly watch list.